If you trade cryptocurrencies, then you already know the market is a dog-eat-dog world. It might sound cruel, but it's the truth. Indecisiveness, inaction, or thoughtlessness is punished at any given moment. And if anyone decides to start day trading without having reached a state of perfection on a paper account, they're bound to become a statistic and join Wall Street's 90%. Is there a way out? With hard work and discipline, there always is. Welcome to the Shrimpy YouTube channel, your top spot on the internet for obtaining the latest info on cryptocurrencies and blockchain technology. In today's video, we will uncover 3 healthy habits that every crypto trader needs to follow to stay profitable. Here's a hint. The first habit has something to do with Shrimpy Academy. So if you're in need of high-quality educational content on blockchain technology and digital assets, make sure to visit academy.shrimpy.io right away. The link will be in the description box below. Before we start with our list, let's make one thing clear. Consistency is key. If you want your trading strategy to stay reliable, you must follow these and other healthy habits at all times to ensure long-term success and to minimize your dependency on luck. This isn't a diet, so incorporate these healthy tips into your trading lifestyle throughout your entire journey to stay on top of your game. Let's start with the one habit that most people might already know. Habit number 1 is stay up to date with the news. A trader that relies solely on technical analysis might perform just as well as trading blindly. Psychology runs deep in financial markets, and if you stick only to cold hard data, you're missing out on half the fun. After all, more than one force is at play here, and if we know anything, cryptocurrencies are more susceptible to drama than any other asset class. News moves prices, but more importantly, narratives move entire markets. So if you're not up to date with the latest news and events, at least get used to being blindsided. But if you enjoy making money, try to build a habit of reading the news and checking Twitter at least twice a day. Narratives form over a long period of time, and no one truly knows which event will trigger it and when. A breaking story can change the course of history out of nowhere, and if you aren't familiar with what's going on, you're bound to panic and make a mistake. Even if you haven't made a move ahead of time, knowing half the story will be enough to minimize losses. But let's emphasize one thing. Crypto-related news is not the only type of information that one should monitor. Although the technology behind cryptocurrencies is decentralized and independent from the rest of the world, their market value is not. In fact, crypto prices are far from stable when legacy markets falter. As we've seen on more than one occasion in the past few years, any extreme price swings in the stock market have a major effect on Bitcoin and thus all other crypto assets. Before the coronavirus epidemic hit us in 2020, traders had 2 months to predict that a global fall in production would lead to a black swan event on the stock market, which would in return force crypto whales to sell as well. Don't worry, this is simply the nature of financial markets. When times are tough and uncertainty strikes, no one is willing to step in and buy. But when the coast is clear and everything appears stable, investors rush to their trading desk to enter to buy orders. So what kind of news should you follow? Since practically all kinds of factors affect prices, you might as well just cover news from all spheres of life: business, finance, health, science, and even politics. So to conclude, spend as much time as you can staying updated. This means monitoring on-chain data, analyzing development updates, anticipating stock market turbulence, searching for potential changes in regulatory stances, and so on. As a matter of fact, make checking crypto Twitter the first step in your morning routine. Habit number 2, examine market trends. Let's admit it, what most of us do right after waking up is frantically scroll through portfolio apps and dive headfirst into CoinMarketCap's crypto leaderboards to check if anything's happened overnight. While this might seem like an unhealthy obsession with price action and anxiety regarding crypto's future, examining prices regularly is actually not that bad. In fact, what most traders should be doing is examining trends. Whether it's your favorite cryptocurrency, a special market segment like DeFi, or simply the macro trend of the crypto market, spotting patterns and discrepancies in market data is always worth it. For example, let's say that you love investing in governance tokens listed by yield farming protocols. Yield farming is one of DeFi's most wanted financial instruments, so investing in such a platform should be a safe bet. But what happens when your protocol of choice loses steam and another project steps in? What you should have been doing all along in this particular case is checking DeFi Pulse for data on TVL, a metric that represents the total amount of collateralized value locked onto a protocol. By regularly observing this crucial data point, you would have noticed a change in trend and therefore a potential change in your investment's position on the leaderboard. The crypto sector is highly competitive, so market share is not a joke. If developers don't work on perfecting their protocol so that it stays the most attractive option on the market, another project will soon replace it. The end result, your portfolio's value will be impacted negatively by this change in trend. In general, keep your eyes open for anomalies and deviations. It's also important to understand that some anomalies have isolated effects while others don't. For instance, Uniswap losing its market share to a rival decentralized exchange will not have much of an effect on the rest of the market. But if a dominant asset like Ethereum suddenly sees a drop in volume or dominance, the entire DeFi sector might experience losses. So far, we've covered 2 habits critical to your trading journey. There's a lot of new information to take in, so let's pause for a bit and put your memory to the test with a quick quiz. Let's start by checking your understanding of the first habit, staying up to date with the news. Here's your question. What kind of news do you need to follow in order to anticipate uncertainty in the crypto market? A, only cryptocurrency news. B, both cryptocurrency news and stock news. C, politics. Or D, all of the above, plus any piece of other news you can find on the internet. The answer is D, all of the above. A good trader makes sure to stay up to date with the latest news and events from all spheres of life for the best results. Now, for the second habit, examining and monitoring market trends. Don't worry, this time we're asking a simple yes or no question. Do trend deviations on a smaller scale, for example, a segment such as DeFi, affect the whole cryptocurrency sector? If your answer is no, you're correct. While there's definitely a possibility for smaller factors in the crypto market to affect the entire decentralized financial landscape, the effect produced will definitely be negligible compared to what can happen if a paramount factor like Bitcoin's dominance or Ethereum's gas fees suddenly changes. Habit number 3. Keep your emotions in check. Remember when we said that psychology plays a crucial role in financial markets? That's a fact not only for the general market, but for you as an individual as well. Being a successful trader is hard not because it requires you to spend countless hours studying technical analysis and reading the news. That's the easy part. Market participants struggle staying successful because they are forced to change their personality and adapt. Those prone to mood swings are simply not a fit for trading. Why? Because emotions have too much of an effect on your performance. You might keep your cool and have a lucky streak every once in a while, but all it takes to go back to square one is a bad day when you decide to trade irrationally. If you don't know how to control yourself or restrict your impulsivity, you will definitely encounter these moments frequently enough to leave with empty pockets. So, how do you control yourself? Do things that help improve your mood and don't dwell too much on negativity. If you feel yourself drifting away and becoming irritable in the middle of a trading session, go take a walk, meditate for 10 minutes, abstain from social media for the rest of the day, or catch up with your friends. Do literally anything that lifts your spirits and turn it into a habit. Not only will it put your stress levels at bay, but it will also turn you into a better trader. What's not to love there? Do you have a personal habit that has a positive impact on your performance? Share it with everyone else in the comments below. Who knows, maybe it'll help someone else out. As always, please leave a like if you enjoyed watching this video, and make sure to subscribe and click the notification bell so you can be the first person to watch our latest content.